Hey guys, welcome back. Dan Frio, the Mortgage Update. Today we're going to go over FHA loans. Now I have a lot of videos, believe it or not, on FHA loans, but there's still a lot of confusion with realtors, especially on why you would use an FHA loan, because a lot of times they think it's basically the client had bad credit or a recent bankruptcy or things like that. And one of the biggest things that I just realized after a few conversations with multiple realtors is they think the home needed to be FHA approved for some reason or however that works. So I want to go over in this video credit score requirements that are needed, the property types and what needs to be done to check and see if the property is FHA eligible, and you'd be hugely surprised there. And then I have a scenario on a gentleman looking to buy a 3-unit property, how FHA was able to save him not 100, not 200, more than that, and I'll show you that at the end. But that was a shocker for me as well. So hopefully you like this video. Please don't forget to give me a thumbs up, please, if you like the video. If you don't, please write down in the comments what you'd like me to do a little bit better. Also down in the comments, please give me some questions. Give me some scenarios that you would like me to go through. Maybe I'll do a video in depth on that one, or I could just answer your question. Also, please don't forget to subscribe. That helps me hugely by reaching out to a lot of people. And I'm probably getting about 10 to 15 subscribers a day with 600 views a day as well. So thank you for all that. So let's get on to the FHA. I put this on is what are FHA home loan requirements? And again, if you're a realtor watching this, it's very informative to you. And if you're a consumer looking to buy, and your realtor contradicts what you're telling them that you saw on here, please have them call me, because they're missing the boat. So let's get into it. First thing is credit scores. What's required and what kind of down payment are you looking for or looking at? FHA is known for the minimum down payment, and what's required normally is 3.5%. And that's a lot of times why someone might choose to go with an FHA loan. That's not the only reason why, and I'm going to go over that here in a second. But FHA, believe it or not, you could get away with a 500 credit score, but you would need 10% down. Yes, I said 500. So if you're in the 500 range and we're turned down and you meet this criteria here, please reach out to me, because just because the lender that you spoke with at that time doesn't offer these, this credit layout, doesn't mean you can't get it. These are truly FHA rules right here. Not all banks have to abide by them. So credit scores, 500 to 580, you need 10% down. 580 and above, you can get away with 3.5% down, and that goes all the way up to a 4-unit property. So you're looking to buy a 3 or 4-unit property, this is the way to go. Bankruptcies, you have to be 2 years out, and good credit reestablished after the fact. Foreclosures and short sales, you need to be out 3 years. So that helps a lot of clients in these areas right here, not only is this area here. So let's get on to here's where a lot of confusion has come into play recently when I've spoken with several realtors, and they were for some reason under the impression, even homes or 2-unit or 3-unit buildings had to be FHA eligible. They don't. So let's go through it. Here's the property types that you can get through FHA. Single-family homes do not need to be FHA eligible. 2 to 4-unit homes also do not have to be FHA eligible. Townhomes and PUDs, same thing. The only property type that needs to be FHA eligible, and you have to call them. Most of the time, for some reason, the realtors don't know this part, and if you're a realtor and you don't, please call the selling agent or please call the association or find out who the association is and find out for yourself. Here's the website you go to, right here, and you can pause it right here and jot that down. And I'll put it down in the comment section below so you can find it easily to link through. If you're looking to buy a condo and you want to find out if it is approved or not, you have to find out the association name and then go to this website and plug it in, and it'll tell you if that that association is eligible or not. If you have a townhouse, it doesn't have to be. So if you're a realtor and you're trying to sell a townhouse, and you're on there, you're like, well, I can't show it to FHA approved or pre-approved clients. No, you can. So this can open up, probably 50% of my business is FHA. So that's why I'm trying to stress this to a lot of people, saying, if you're not using the FHA programs, you're missing the boat. So again, go back to the credit criteria, which you got in the 500 scores. These are the property types that you're looking at to see if they're FHA eligible. Really, you'd only have to be concerned with condos. We'll go to the next one. Here's a scenario. I'm going to go through a real life scenario on a client that I'm helping. And what they're looking to do is buy a multi-unit property. So they're looking to FHA loan limits for 1 to 4 unit properties. And they want the minimum down. And unfortunately, they don't have a 780 credit score or 700 credit score. Their credit scores are a little bit lower. So here's basically the breakdown of this loan. The client has a 640 credit score. They're looking to buy a 3-unit property at $450,000 purchase price. So I broke it down for them. And the best scenarios would be an FHA loan versus Home Possible. And Home Possible is a product that Freddie Mac offers. And there's 2 entities. There's Fannie Mae and there's Freddie Mac. But Freddie Mac has a special program. It's called Home Possible. And it's for, a lot of people looking to buy a home or buy one of their first homes. It doesn't have to be your first home. Basically, it just has to be the only property you own at the time when you purchase it. And so we compared the 2 programs, and I was actually shocked when I put all this together. So the loan type, FHA versus the Home Possible. Again, FHA and the Freddie Mac version of this boutique product. The rate at the time, and I'm not going through APR and all that stuff because I don't have the title reports and everything else, but the only cost that you incur by using me, and I'm a broker in the Chicagoland area, in most cases for the loan portion, you're going to have the credit report and an appraisal fee. That's it. And I don't make a penny on either one of those. So if your appraisal fee is $470, you're only paying $470. If your credit report bill is $26.26, that's all you're paying. I don't have an admin fee, a processing fee, a doc prep fee, a underwriting fee. I can probably on average save you about $3,000 in costs. And actually, this client actually called me when I gave my proposal because he was looking at somebody else as well. And that alone, my rate was about an eighth lower. I have all these options for him, and I went through in detail with him to guide him through which product to go through. And then when it came down to the costs, that was a no-brainer. That wasn't even a comparison because the other place, I think it was like $3,300. So I was saving him thousands of dollars. So we're going to go rate $475 at the time with me. And the Home Possible program was $575, and this is all through me. So I'm not comparing it from my FHA versus somebody else. This is what I could do for this client. $475 FHA, $575 Home Possible. Down payment 3.5% with the FHA program, 3.5% down, 5% down on the Home Possible. What the down payment is you take this percentage of this purchase price, and that's how much money you have to put down as a down payment on the property. PMI factor, if you don't put down 20% when you're purchasing a property, you need PMI. It's mortgage insurance. It's not homeowners insurance, it's actually mortgage insurance. So in this scenario, again, a client with a 640 credit score buying a 3-unit property, his PMI factor was 0.85. The PMI factor on the Home Possible was 1.47. You can see it's almost double what that is. So not only he has a higher rate, he has a higher down payment that's required, he has almost double the PMI. Here's what the bottom line was. When I added in his taxes and insurance to all of these factors, his payment is going to be $3,252 under this program versus the Home Possible at $3,658. A savings of $406, but I rounded it. $400 a month by going with an FHA program. The one downfall, FHA does hit you with an upfront fee, but that fee is basically, in this scenario, it's paid back within about a year a year and a half. So for the next 28 and a half years, he's going to save $400 a month. Well, there's other things to it, but initially he'll start out with a lower down payment and $400 less a month in mortgage payments. It's a rental property, so that's $400 extra in cash flow basically that he's getting out of this. So when I compared the two and going through everything, you need to know the FHA programs, and that's why I'm putting this video together. So if I could be of any help, like it just helped the client that we just went over, save about $3,000 in costs and reduced his payments by $400 a month, please reach out to me. I'd love to help. You can reach me at themortgageupdate.net. Call me personally at 630-338-1160. You can even reach me via email at dan.frio, F-R-I-O, @gmail.com. So I want to thank you so much for watching. Please don't forget to subscribe. Give me a thumbs up and have a great day. God bless.